Rochelle, the most anticipated speech at this year's symposium was that of Mario Draghi, the president of the European Central Bank. Market watchers were hoping for some kind of clue from him as to when the ECB will be pulling back on its 60 billion euro a month bond buying program. But there was no mention of that in his speech, though he did say that the global recovery is firming up, which the market interpreted as meaning that the brakes will be put on that bond buying program sooner rather than later. So we saw the euro rally against the dollar up to a high that we haven't seen since 2015. Now, really what his speech focused on was globalization, and his words were in defense of it. He said the recent trend among some advanced nations to pull away from international trade was something that was concerning for the global economy. In a statement, he said, for advanced economies, the importance of trade may actually be growing. As economies converge towards the global technological frontier, innovation becomes more important for sustained productivity growth. And as OECD research has shown, openness to trade is a crucial factor in enabling an economy to benefit from frontier innovation. Earlier on Friday morning, we also heard from Janet Yellen, the chairwoman of the U.S. Federal Reserve. Her speech was also short on monetary policy and interest rate guidance. Instead, she focused on the past, taking a look at the financial crisis in 2008, what a dire situation the global economy was then, and the importance of regulation in ensuring that a similar crisis would never happen again. She had a 19-page speech, and in it, she strongly defended Dodd-Frank, which was enacted shortly after the crisis. In a statement, she said, the balance of research suggests that the core reforms we've put in place have substantially boosted resilience without unduly limiting credit availability or economic growth. Words that are in stark contrast to views held by the Trump administration, which has consistently blamed Dodd-Frank for tightening lending and slowing down economic growth. Now, Yellen did call for modest adjustments to the Volcker rule, which limits proprietary trading at banks. But the Trump administration has called for significant changes to the Volcker rule. So the feeling among many is that this may be Yellen's last moment here at Jackson Hole as head of the Federal Reserve. Her term ends in February. She could be nominated by President Trump for another 4-year term, but the expectation is that he won't pick her, that he favors Gary Cohn, the ex-president of Goldman Sachs. The consensus really is that after this speech, her odds of being picked have been lowered.